Good morning, everybody. Welcome to the latest webinar from Crystal Specialist Finance. Today, we're talking to some buy-to-let masters. So we're talking all things buy-to-let, and I'm delighted to be joined by two true industry experts. So please welcome Grant Hendry, Head of Sales from Foundation Home Loans, Annette Tilbury, National Account Manager from West One Loans, and Cara Williams, Specialist Account Manager from Together. Thank you for taking the time to join us today.
Thank you. Thank you very much.
During the next hour or so, our aim is to help you make the most of the opportunities in the buy-to-let market in 2022, whilst also showing some opportunities within the buy-to-let sector for your landlord clients. Now, the world seems to be in a constant state of change, but one thing that always seems to remain constant is there always seems to be something new to talk about in buy-to-let. So today we're going to be touching on many aspects of complex buy-to-let, including current market conditions, EPC changes, holiday lets, expats, and much more. But of course, we also want your questions and feedback too. At the bottom of your screen, you have a Q&A button. So please use that to fire any questions that come to mind during today's session, and we'll do our best to cover them off for you. We do have a packed schedule this morning, so let's dive straight in. So Grant, I'll start with you with this one, if that's okay. So just how busy is the buy-to-let marketplace at the moment, and what type of deals are you currently seeing?
Good question. I think the market has started as it kind of finished, and we were expecting that fall off slightly with the stamp duty holiday coming to an end, but the market seems very, very buoyant. We've got more and more lenders coming into that space as well, which is making it a lot more competitive for us. For ourselves, I think the remortgage market is certainly growing for us, and we're starting to see that bite where people are falling off their 5-year deals. But also limited companies, that's fallen slightly. Actually, we're seeing more individuals coming to us versus limited company, and that's partly to do with the remortgage swing that we're seeing, that people are remortgaging their individuals are coming through versus that supply and demand issue that's going on at the moment. So people purchasing generally will purchase in a limited company through us, but yeah, the individual market's picked up. But probably the biggest area where we've seen growth as an individual sector is short-term lets. That's doubled percentage-wise from business, and that's seems to be a really growing area for us as a lender. But also HMOs, multi-unit blocks is a really important thing. Landlords are looking to diversify more, so we're certainly seeing that side of the market growing as well.
Excellent, thank you. Some good points straight away in there with the remortgages and the short-term let opportunities for brokers to pick up within their existing client bank. Annette?
Yeah, seeing a very similar pattern really to foundation, particularly the holiday lets, expats as well. We've seen a massive growth in expats. Another area, day one remortgages. We're getting a lot of people where they're buying property that need work, perhaps doing that on a bridge, and then immediately want to take that out to raise as much as possible. So that seems a massive growth area for us. And flats above commercial, I think perhaps some of the lenders are getting a little bit more cautious with those. We're definitely getting a lot of valuations where it's been declined by another lender, referred across to us and asking if we can help. So yeah, that's been quite beneficial for us as well.
Okay, yeah, that's an interesting point, because we've seen some diversification over the last few years from kind of your traditional landlord just owning residential property that maybe started to venture into that semi-commercial space. So it's an interesting point if they're now seeing difficulties on the high street to get access to some of those.
Yeah, I mean, sometimes I had one recently where it was a house next to a petrol station that being declined by another lender, but there was a reasonable amount of gap between the two, and we were quite comfortable with that. And also properties with more land. So we used to say an acre of land with a buy to let, but we don't state an amount now, because we've seen more and more people that are looking for properties with a lot of land. So not your traditional buy to let, but whether it is a fallout of COVID and people want more space around them, but that's definitely become a lot more popular.
Okay, interesting, thank you. And Cara?
Yeah, I think ours is very, very similar. I think it's still very, very, very busy. The purchase market, I don't think will be as busy this year due to sort of lack of stock. We're seeing a lot of remortgages as well, as Grant mentioned, in respect of people coming to the end of the term on fixed rates, wanting to lock in those fixed rates as well. And I think what we're seeing more of is landlords diversifying their portfolios. So from buy-to-lets, HMOs, holiday lets, multi-unit freehold blocks, and we're lending all sorts of different types of assets, from your non-standard construction, again, as Annette mentioned, your semi-commercial securities. And I think when you do go down your own high street now, you look, don't you, and it's kind of like closed, 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 open, open, and you see the big sort of development signs for sale, and more of those via the sort of committed development we're seeing being turned into the residential buy-to-lets.
Okay, yeah, again, some very interesting points to come across there. The supply of properties, I think, is a particularly interesting point, because I've got a client that I've worked with for a number of years who's always bought properties relatively cheaply, done some work to them, and then refinanced them or kept them as buy-to-lets afterwards. And he said he's just finding himself priced out of the market, because although there's properties available, it just doesn't make sense from an investment point of view for him to spend that kind of money on them. I think that's something that a lot of landlords will be addressing as the year goes on.
Yeah, I would just add to that. I've had a friend recently who they've been trying to buy a buy-to-let for months and they just keep getting outbid. And in the end, the agent's actually saying that that's overpriced now. I wouldn't bother with that one, where there's so many investors because people are looking for a better return on their money. And, you know, it seems like there's a little bit of a bidding war going on at the moment. And it seems to be a lot of areas. It's not just confined to a popular hotspot. It seems to be across the board.
Yeah, very interesting. So that leads us nicely into the next part of the question then. So where do you think the biggest challenge is for today's buy-to-let landlords? So Grant, do you want to pick that one up first?
Yeah, absolutely. So there's several parts to this. I think when you take inflation to start with, it's pushing 6% and potentially being double digits. I think the concern for landlords there is tenants' ability to be able to pay as well. So that's definitely going to be a fear for landlords. I think the supply and demand that Annette and both yourselves have just kind of commented on as well. So landlords' ability to, whether it be a first-time landlord trying to get into the market or an existing landlord trying to grow their portfolio further and just getting their hands onto property. So that's definitely an issue. But I also think the green agenda that the government has in place for landlords, making sure that their existing portfolio is in a position that come 2025, it's going to be an A to a C. So there's some of the kind of the main things, but there's a lot going on at the moment in the market. On top of that, you've got the rate rises that are now happening. So with that additional pressure on landlords, where they may have had a very low rate 2-3 years ago, coming to remortgage, thankfully the house price has gone up, so they're still going to be in a fairly comfortable position. But yeah, I think there's a combination of factors that are putting a lot of pressure on landlords. On the flip side to it, though, I think the difference is the professionalism that landlords have said. So as Cara mentioned, how landlords are diversifying their portfolios is really important, whether they start looking at your short-term lets, or they start looking at your MUBs or properties above commercial. As Annette said, this is where landlords are generally, they're ahead of the curve. They know what's going on. There's a lot of access to information. And I think brokers' awareness as well of supporting them and not just advising on this is the best rate, this is the best lender because it will offer a PT at the end, this is the best lender because you can borrow more money with them, and so forth, with the size of the portfolio, rather than just going, we'll go BM, we'll go Santander, it's a cheap rate. You might be creating mortgage prisoners. So I think landlords are now cottoning on to the need of specialist lenders in the market, and that's putting us in a very good position from that side.
And it shows the need for a broker to be aware of the specialist sector as well, because it could be so many opportunities you're missing out on, but also, as you say, you could be creating problems further down the line for clients if you're not fully aware of the position they're trying to achieve.
Yeah, massively.
Yeah, excellent. Annette?
Yeah, I think the EPCs is an interesting one with the government's guidelines to improve to a C rating. And they reckon that there's only a third of properties that actually fit that category that are being rented at the moment. So you think, well, 2/3 of landlords having to potentially do, you know, some quite substantial works to properties to get them up to a C rating. I think that particularly if you've got a huge portfolio, of properties, you're talking about a serious amount of money you're going to have to find to fund that. So I think I'm not quite sure how much the general public is aware of this bubbling away. Everybody in the industry is talking about it, but I think that will be an interesting one. Obviously, the tax changes as well. You don't know what's around the corner with what else they're going to introduce. So yeah, I think it's just about landlords trying to keep up to speed with what's going on, be aware, so that they can prepare, and that it's not lastminute.com, everybody fighting to get contractors to do work. So yeah, that will be an interesting one, I think.
Well, I've got a case completing tomorrow for a buy-to-let landlord that's taken a second charge on the buy-to-let to do some work to the property. And obviously they're quite ahead of the curve with time on that, but they've decided that because the rates are so low at the moment and we don't know what's going to happen around the corner, they've decided to lock in now and get a rate as early as possible to release that capital, to replace the boiler and windows, etc., to try and get it up the EPC curve a little bit.
Yeah, I mean, we are seeing it. I know most lenders have got green products now to try and encourage it. But I don't think it's hit the mainstream, shall we say, yet. I don't think they're all fully aware of what's going to be expected of them. And I'm sure the timescales will be pushed out because 2025 doesn't seem that far away to me anyway.
Especially after the last few years.
Exactly.
Yeah, thank you. And Cara?
Yeah, no, I would definitely agree. As you say, the last 2 years has flown by, haven't they? And who knew we'd be in a worldwide worldwide pandemic? And I think the EPC changes to C will creep upon us quicker and quicker than we know it. So it's just about educating your landlords, but also us as lenders, helping in that education. And I do as well think that the government needs to play a part in that as well. Making it more sort of advertisable about there for those people that don't know it. So just keeping an eye on that sort of for the future. And from the back of what you said, Kris, we are actually seeing a spike in second charges as well for those who are looking to do improvements to the property, so your boiler, your insulation, in order to bring that EPC rating up to keep that mortgage on that sort of lower rate. But from the second charge, you can then bring up potentially the value of your security and your EPC rating. So then with the value increasing, you can remortgage at a later date.
Yeah, excellent. We've got that penciled in for later on, but I think it's a good time just to roll straight into that now. So for those of you that aren't aware, so since April 2020, the minimum energy efficiency standards need a minimum of E on the EPC certificate for a property to be let. From 2025, that will be raising to C for any new rental properties. Existing ones are given a few extra years to comply. So it could mean that these properties aren't going to be, well, certainly shouldn't be lettable, but we can imagine lenders will be jumping on that a lot quicker and wanting to see what landlords have done in order to get that property to be lettable and obviously mortgageable from that point of view. So we've touched on green products and things there. So Grant, are you seeing any changes in the market now as a result of that? And what are you as a lender doing around this topic?
Yeah, no, so I think there's a couple of parts to it. That when you look at green, once again, we saw when we were one of the first specialist lenders to go into green, and I think everybody thought, oh, this is really complex, this is for vegans and people who wear recycled clothes and stuff, but actually there was a bit more behind it. And it was around September, October time where literally we doubled the amount of green mortgages we were doing, because all you need to do is make sure that the EPC is A to C. So you check that on the system. It's very easy to do. So by just checking that side of it, so we saw that that spike, and literally we've kind of maintained that same level, but it seems to be still a very, very hot topic when we're speaking to packages and to networks and clubs and brokers, that there's a real importance that everybody, to once again to Cara's point, that we all have a part to play in educating brokers on that. We've recently launched into green HMO and green short-term lets, that side of it. So it's definitely a demand and a need for it. But I think from a broker's point of view, the benefits that they can get from that is that if the property, I'll give you an example. I live in a village, and there's an old stone building over the road that's being rented, and people generally go into it in the summer and go, oh, this is a lovely big cottage that we've got here. And then come the winter, because there's no mains gas, you have to have oil, they're then experiencing how much it costs to heat those houses. So by making the changes to the properties now, you will hopefully be able to, one, secure your tenants for longer, two, you'll be able to create greater rental demand for those properties, and also just the general upkeep of those properties makes it a lot more desirable for people. So everything is very intertwined at the moment with what's happening with a mixture of interest rates, with a mixture of inflation, and people trying to curb their costs and control it. So we're certainly seeing landlords looking to capital raise to do those improvements to their properties. And I think to Annette's point as well, when you look at the costs, absolutely. What we're finding now is landlords who have these Victorian properties that you can never get to an A to C. You're just never going to have it because of the way the property was built. That actually it probably is, and I'm not saying it is, but it could be the government's agenda, when you've got this supply and demand, if we can release these properties back into the open market, it can probably help that side of it with that part. So maybe there is an element of government's agenda as well as obviously the target for net zero. So I think there's a bit that I was going to cover on Annette's point, is that actually customers, my advice for landlords and for brokers when they're speaking to their customers, is encourage your customers to get an EPC done. And then you can pay for the additional survey that will tell you what you need to do to get your property to a certain standard, to get it to an A to a C, or just to that next level. And actually, when we were looking at statistics, to get a property to a C that are currently at a D, you're looking at around 41% of properties need to spend between £5,000 and £10,000 to get that to a C. And actually, it's not about double glazing, it's not about air source heat pumps and solar panels, it's about simple things, changing the light bulbs in the property. With the loft hatch, so we built our house recently, and being in the same village as no gas, had an air source heat pump fitted, thinking, oh, this is brilliant, I'm doing my bit. Air I thought was free, but what I didn't realize is how much bloody electricity it costs to suck that air in. So my electricity bill has been like £500 a month, and that's scary. It doesn't, I'm at a B now that I've got my property to. But we had the guy, so I thought I'm going to have an EPC and I'm going to follow the guy around the house, which I don't think he necessarily appreciated. And I was up in the loft with him and he was looking at me like, what on earth is going on here? I've never had this before. But it was simple things that people aren't always aware of. So just loft insulation, that can cost £500. If the loft isn't insulated, just doing simple things like that will make a big difference to what your EPC score is and the number of points that you can get for that. But then if you have your loft, which was interesting, if your standard loft, if you just had a wooden hatch, it doesn't matter how much insulation you have in your loft, all you're doing is creating that chimney where the heat just goes straight through that loft hatch. So having an insulated loft hatch, that might cost you £50 to do those things. Light bulbs to do your house might cost you £50, £200, whatever it might be, depending on how many lights you have in there. But just very simple things that landlords, I think, need to be aware of on that side to get their property to a C before 2025. So yeah, I've really harped on. I can't remember what the actual original question was. I think I've covered it as well as I can. But yeah, I get passionate when it comes to green.
Yeah, we can tell following the EPC assessor around.
He's got a restraining order against me now. But
Excellent. Annette, same question to you. Any changes in the market that you're seeing now, and what are you as a lender doing around the topic?
Well, very much like Grant said, we've got our green range, same situation. If it's A to C, then you can benefit from those better rates. And we have seen a growth. When we first launched it, it seemed to take a little while for people to really pick up on it, even though they were the most competitively priced products. But now we've had them out for a while, we have seen quite a big increase in the growth there. So yeah, I think that will continue undoubtedly. I think once clients think, oh, I can benefit slightly by having a better rate. Yeah, and obviously new builds, they're helping, having the better rating, etc. But a bit like Grant said, I think a lot of people don't realise the small things like just light bulbs. You know, they can make a massive difference. So yeah, it's about looking at everything and trying to improve it, but trying not to leave it till the very last minute. Is the best option.
Excellent. And any additional advice to add other than the long list that Grant gave us?
No, I don't think so. I think obviously we had the announcement that VAT was going to be going on the green products. So if you're buying stuff to enhance your property, etc. So I think, you know, the government might be a small step, but at least they're making steps in the right direction to try and encourage people. I just think at the moment it's perhaps difficult timing because everybody is seeing the prices going up with so many different things that it's you know, the pull on your resources seems to be getting greater and greater. So but obviously it's something that does need to be looked at and prioritised.
Okay, excellent. Thank you. And same question to you, Cara.
Yeah, I think landlords are definitely becoming more conscious to these requirements, and from sort of Together's point of view, we lend against some really unusual property types that may actually never get to an EPC of C, for example, like your grade 2 listed buildings. So we appreciate there'll be some exceptions to this rule. We are looking at a green mortgage product to sort of be coming in the future. But my advice would be to sort of, rather than wait, have a look into it now. And I think education is key from ourselves as lenders and also brokers, and sort of looking at the government guidelines as well.
Brilliant, thank you. And a quick follow-up to that then, what's your attitude on bridge exits? So is there a minimum time or anything like that you need for someone to be on a bridge or to have owned a property before you'll remortgage them?
No, so we have sort of no ownership rule, and they don't have to be on a bridge. They can repay it within a month if they want to. So we're happy to have a look at the exit for the bridges as well.
Brilliant, so someone could do the work and then jump straight onto a term.
Yeah, they could carry out the work, bring the EPC rated up and jump straight onto a term loan facility.
Yeah, excellent. Same to you, Annette. You mentioned that you can do day one remortgages as well.
Yeah, exactly. So we're seeing big growth in that area. That's exactly what people are doing, but getting the bridge, spending as least time possible, getting all the work done, and then immediately remortgaging it, pull out the most they can to move on to the next one.
Excellent,
We're,
thank you.
we're also, Chris, from our side, foundation, we've got no ERC products. So we're seeing that side growing, where people will use that to do the changes to the property and then flip it to a 5-year after that. Within that time, or you've got early remortgage products that allow you to remortgage, similar to Cara and what Annette said there, that you could remortgage from day one off a bridge, or if you wanted to wait for a standard product, it's 3 months off a bridge. So yeah, there's several different options that customers have got access to for that.
Brilliant. It's great to see the flexibility there as well, that lenders are offering these different options for landlords in order to both improve the property and then to get a more long-term solution afterwards.
I think that's where the product innovation needs to go to that next level, especially around green. So whether you have a green early remortgage type of product that's available, or the ability to capital raise, whether you have 2 different rates on it to encourage people to make improvements to the property, or you send out 100 light bulbs to a house when you complete on the mortgage to do it and invest in the property. All these things is what we need as lenders to keep evolving. It's all well and good saying your rate's slightly cheaper, your arrangement fee slightly cheaper because you've gone green. Well, actually, there should be more to it. There should be more education at the same time from the product side.
Brilliant. I think that's where the specialist market stands on its own. Yeah, it's leading the way in a lot of these things and launching products before the high streets are able to get their head around what's happening with it.
Yeah.
And so the speed of adoption in this sector is really refreshing to see. So moving on to the next big topic that we've got then, COVID. So Cara, I think I'll start with you with this one. So what impact did COVID, and more importantly, the outrun of the pandemic, have on you as a lender, and what lessons did you learn from it?
Yeah, so I think like every lender, we had to adapt quickly, particularly to the working patterns. One day you're in the office, the next day, Kris is saying you've all got to work from home, and it wasn't easy. We've got over 600 staff. To get 600 laptops to sort of a home working office, coupled with the functions of what you've usually got in the office as well. But also, when you're allowed to come back in, making the office safe as well, so your social distancing. So there's a lot of factors around there, which I know a lot of other lenders will have had to look in as well. And what we learned was actually we could adapt quickly to change. It was difficult as it was new ground. And nobody had ever been there before. As I said earlier, who knew we would be in a worldwide pandemic for the better part of 18 months, living with 1 hour of exercise a day. And nobody knew how long it would actually last for either. And also the effect that it would have on the financial sector. But I think what we did, we took a step back, we had time to review our processes, look at innovation, and it allowed us to actually hit the reset button and actually review our business. And for the past 2 months, we've actually had record lending months, and that's record lending months since the pre-pandemic as well.
Okay. Do you see many clients that have been impacted financially by COVID?
We're actually pleasantly surprised. I think the market has actually stood up with no huge impact. We've, in fact, landlords are focusing on increasing their portfolio, diversing their portfolio. I think the biggest issue was value, was not being able to go out to properties if it didn't qualify for an online home track valuation. Once we could see sort of where the market was heading, we actually found that our customers hadn't been that affected by the impact of COVID, which was pleasantly surprising.
Excellent, thank you. Grant?
Yeah, I think very similar. I think Cara hit it quite well there with regards to how lenders adapted. For myself, or for Foundation Home Loans, should I say, it gave us a huge opportunity. So firstly, because of how we were able to get everybody working from home very quickly, and we were literally in Curry's PC world, whichever way we could, just grabbing whatever laptops met the spec and managing to make sure that everyone could work from home. So we could pivot very quickly. So that was one big advantage, but it also gave us a chance as a lender to test our back book. Who's going to fall into trouble here? Who's going to struggle if tenants aren't paying and so forth? Actually, so firstly, from that side, first-time landlords was one of our strongest areas with regards to not taking advantage of mortgage payment deferrals. And we were worried. It was our first area we pulled out of, but they did really well. Secondly, managing our book internally allowed us to keep our mortgage payment deferrals below 16%. So that gave us great confidence. And then I think with the government stance with what they did with mortgage payment deferrals, what they did with the stamp duty holiday, just showed how important property is to the UK economy. And it just caused this fantastic position. And then lastly, with regards to how I want my sales team to work, it put us in a position where my biggest bugbear, and I'm sure it's probably the same for you, and is you measure a KPI for a business development manager in the field on the number of appointments. So I had BDMs, and I'd get their expenses. They've traveled 200 miles in a day and seen a broker who does one mortgage a month or one mortgage a week. And we're never going to get any business from this person, but you've ticked a box. So by changing our operating model, allowed us to really speed up and go to that next level and be a lot more competitive. And we're constantly managing that margin and the profit, the way the business is run. And brokers' most important thing is I need to be able to speak to you. I've got a problem, I want to be able to speak to you. I've got a new case, I want to be able to speak to you. If they're in meetings 3 or 4 hours a day, it makes it very difficult. So that gave us a huge advantage. I'm really pleased with how it's worked for the team. So there's a bit of a variance to what they do on activity. But I think the thing with COVID is we haven't really seen the damage of COVID. We haven't seen the damage of Brexit. And then you then put on top of that what's going on in Ukraine at the moment. It's quite a scary place as well. It's almost, you go in a shop now and it's like COVID. What was COVID? I don't wear a mask. I hug and kiss everybody. I get my hands onto. We've just completely almost forgotten about it. And I think it will come back to bite us slightly in the future if we're not careful. We need to learn from some of these things and not start slipping back into our old habits.
Thank you. Annette?
Yeah, I think we were quite lucky in a lot of ways with like the furlough scheme. I mean, we still lending to clients who were furloughed. Obviously, when that came to the end, they either retained their jobs or would look for new employment. So I don't think that impacted us very much at all because we don't have a minimum employment or self-employment period. Even if they were let go, people seem to be able to find jobs fairly quickly. And so that didn't really impact us. The bounce back loans, we've had a few clients that have had bounce back loans. A lot was where you actually looked at the situation and they didn't actually need the funds, but they took it as a precaution because they thought, well, I might not need it today, but what happens in a month, 2 months' time, and it's not available then, so we'll take it. So again, that didn't really cause us too much of a problem because the customers that we were getting either hadn't really used it and so decided to pay it back or subsequently paid it back. So yeah, we still get the odd one now again where they've used that facility. But I think the major issue, as Tara said, was when the valuers couldn't get out to properties, That was the biggest issue, because for us, if you couldn't get a valuation done, we weren't able to do the offer. And then, of course, when we had the stamp duty holidays, etc., the amount of additional business that was being done, and the solicitors, I think that was the biggest problem we had to cope with then, was solicitors not being able to cope with it and deal with it quick enough. But yeah, I think overall, when you think of what's gone on, it doesn't feel like this market has been too adversely affected. But as Grant said, we haven't really seen where this is going to end up yet, so you don't want to say too much and tempt fate, really. But yeah, I think we've been quite lucky.
Excellent, thank you. We've had a question coming from Paul on this topic. What's the position regarding self-employed applicants? He says, I'm finding the resistance to accept these as during the pandemic, their net profits fell and they're not due to submit new recovery accounts for several months. So I'll start with you, Annette, with that one. How would you view that scenario?
We don't actually need to see SA 302s or anything like that. So we would just be asking the client to declare what their level of income is. And although we have seen a lot of clients where their income did drop quite dramatically in some cases, because now we're further out of it, we've seen that they've picked up. So if needed, they were able to evidence this is the level of income we're earning now, and we would just take that, because we're basing our lending on the rental rather than earned income, so we don't have a minimum or anything. We can be a little bit more flexible on those things. I think it's more, the lenders that have got minimum 25,000, for example, and they want to see that evidence. Because we don't have that hurdle, as long as we're feeling comfortable. And the credit report really will give us a good indication if they run up their credit cards, are they to their maximum, and those sort of things. That's what the underwriter will be using to assess. So you can get a feel of what's going on without necessarily needing to see SA 302s that show what their income is, which is always historic anyway.
Thank you. Grant, anything to add to that one?
Yeah, well, I think I know this is buy-to-let specialist webinar, but it could potentially be a slightly residential question as well, which we do. And for ourselves, so on the buy-to-let, exactly the same as Annette from our point of view. So I agree with that side of it, and how we would assess it at foundation. On the residential side, we can use projections as well, so we can take the latest year, but by seeing that evidence that it has picked back up, my only ask is that you just make sure that you speak to your BDM about the case beforehand. They can run it past a senior underwriter and get the approval to say, this is what I'll need, but I'm happy to use work on a projection to use that higher level figure. So yeah, just use your BDM as much as possible. They're the experienced people. They know exactly how to get the cases presented in the right way to an underwriter. So take advantage of that.
Thank you. Cara?
Yeah, no, we're exactly the same. So from a buy-to-let perspective, if it fits on rental, we don't have to take any background income into account. We have no minimum income criteria. We can also look at projections. If you are unsure, exactly what Grant said, speak to one of us, one of your BDMs. We can put you in touch with an underwriter directly, or if the client does have an accountant, our underwriters will also speak to the accountant as well to get the income verified.
Excellent, thank you. So there you go, Paul, 3 lenders there that would look at that scenario for you as well. So we'll pick that up with you afterwards, and hopefully we can get that deal placed for you. So the next hot topic that we've got to look at then is holiday lets. So Annette, I'll start with you with this one. So after the staycation boom of 2021, what impact did you see on the market, and how do you see this settling more longer term?
Well, I think I'd expected it to calm down a little bit more, because it did go absolutely manic, but it just seems to have continued for holiday lets. I think, again, people are looking at different property types. So we'll do the single property as well as the multi-unit blocks. And we've seen a growth in the multi-unit block purchases being made. And yeah, we base our lending on the AST rental value. And I know some lenders use the low, medium and high. But that works for us. We don't really have too much of an issue with them fitting. We go up to 75%. And I always get really odd phone calls where people phone me and say, oh, you won't do this one, will you? Because the property's in Milton Keynes. And I'm like, well, I haven't got anything against Milton Keynes. Yes, we're happy to lend. And they're like, oh yeah, but it's not a holiday destination, is it, Milton Keynes? And you're like, well, no, Airbnb is fine by us. So it can be to visit family, kids in university, various reasons. So yeah, I think that has evolved dramatically, allowing Airbnb to be accepted. And yeah, at the moment, there doesn't seem to be any drop off or downturn in it at all. It seems to be very, very popular.
I think as well, it's that diversification for landlords. It's so important to have that ability to create greater rental yields. The short-term lets, your Airbnb scenario works really well in that side. To evict clients, it makes it a lot easier because they're there just for the weekend or for a few days. They're not there to stay for months on end. So it makes it easier for landlords. And what Annette said is exactly the same for us. We don't do MUBs yet. I would love to do MUBs because I think there's definite demand for that. I'll let you have it for a little bit longer, Annette. So
yeah, do.
But yeah, as I mentioned on that first question you asked, we've doubled the amount of business we're doing percentage-wise on short-term lets. So there's a real demand for that for landlords. And I always use the example, when we first launched, we were one of the first lenders, Annette was with us when we launched into short-term lets, and there was we were looking for a thatched cottage by the sea, this beautiful little property in the middle of nowhere. No, it's those properties in Milton Keynes and Leeds where I might go and use it for 4 days because I've got meetings up there rather than stay in a hotel. And then on the weekend, some parents are going to go and see their daughter at university. So it offers that verification, a variety of people who can use a short-term let, not just your holiday lets on the coast. So it's a really good diversification tool for landlords to use.
Excellent point. Cara?
Yeah, and I think that we've still seen an increase on the holiday let market as well. And I think people have fallen back in love with the UK again. So it is about sort of different places they may have not been to because they've been going abroad, or they may have not seen before, and we're still seeing a high demand in that area. And we go up to 75% loan to value on your holiday lets. We can use projected income, so we don't have to use sort of your high, medium, and low seasonal value. We also look at multi-unit freehold blocks, your Airbnbs. I think, as Grant said, it's about the landlord sort of diversifying that portfolio. So not just because you fall in love with the UK again, but actually, you know, we had a property last week, and it was a multi-unit freehold block in Preston, but it was like an Airbnb basis. And are you sure you can land on that? Yeah, we can land on that because, you know, it was near a university. Families can go and visit their children, family members. So it is still seeing a good increase on that as well.
Excellent. There's holiday lets and short-term lets that are coming across there. And I think that's an excellent point about falling in love with the UK again. I think when people thought of holidays previously, it was instantly Spain, Greece, Portugal, wherever we want to head off to. I had a week last year in South Wales, and it happened to coincide with the hottest week of the year, which probably made it look a lot better than it would if it was a grey, damp week. But my little girl now loves the thought of just going back to South Wales again. Every time we talk about holiday, oh, does that mean we're going to Wales? Wales was amazing. And I think we a lot of the time we're too quick just to pass up on those things. And the amount of properties available and the different types of properties available as well. You know, it doesn't have to be a caravan park anymore. We can go stay in that nice thatched cottage by the sea and actually make a nice experience of it as well.
It's, my boss is looking. He's desperate to buy a short-term let property, and he's looking at buying a scout hut. It'll probably be Together that would be able to lend on it, but it's a scout hut in the Isle of Wight. And he looked at it and he goes, I can't fail on this. The only thing is it going to keep going up in value? It's quite expensive what you were buying, but it was really quirky. And for somebody who's been in the Scouts, who wants to have that kind of nostalgia linked to it, there's quirky things that people will buy to do that. And the rental demand was, when he looked at the back book, the history on it, it'd been let all summer, and you make some serious money from it. So there's definitely some really good investments out there for landlords.
Excellent. So moving on to experience then. So how do you as a lender view, we'll take both ends of the spectrum here, we'll take first-time landlords and then the very opposite end up to professional landlords or large portfolios. Grant, do you want to start us off on that one?
Yeah, so I mean, first-time landlords is a big area for us. It is a growing area for us. We've got no issues. We absolutely love first-time landlords. And what we often find is, let's just say that a client's got some inheritance or money that's come to them. For them, they want to probably go into HMOs as well. You can come to us and after 30 days be classed as an experienced landlord. So you can buy property A, a standard property, and then property B a month later, that's a HMO multi-unit block. So we're all in favour of first-time landlords at Foundation. It's certainly a growing market on that side. What was the second question?
The opposite end, so professional landlords or large portfolio landlords.
Yeah, so we've done our largest portfolio last month for a landlord. So before, we were 3 million was the maximum you could do with us. Didn't care how big the background portfolio was. But for professional landlords, if they've got more than 10 properties, we'll fill out the property schedule form for them. And we do pretty much one underwrite. So you would submit the portfolio to us. And let's just say you brought 1 or 2 properties to us at the beginning. We do one underwrite. And then in 6 months' time, well, within the 6 months, if you bring another 2, 3, and so forth, we'll use the original underwrite as a master case. And all we're doing is underwriting the property, which makes it easy. So we've extended it to 5 million, but we can go well beyond that. And the portfolio landlords, it's something I love. I love the fact we're doing it. I love the professionalism of it, but it does concern me that this divide is happening, which is why I want to see this stimulus of first-time landlords trying to get into the market. The same for first-time buyers getting onto the market, but first-time landlords, sometimes they're getting priced out. And Annette made a really good point that people who want to enter the market are going there and they're being outbid on properties. And it's just not a business decision. You sometimes get very emotionally attached to a property. So separating that's important. So what I don't want to see so much is that you just have these core group of professional portfolio landlords and your first time landlords going, I just can't get on, I can't do it. They want to. It's such an important part of anybody's diversification of their overall investments is having property within that. And to me, it's really important for first time landlords to be able to enter the market, which is why we've increased the LTV for landlords just coming onto the market as well. So rather being your 75 going up to 85% for a first time landlord as well is another good entry point. And diversifying, I've used that word probably 15 times, 20 times so far, so apologies, but buying outside of area. So looking further afield, looking in the north where you can buy properties a lot cheaper, where you do create good rental yields is also another great opportunity for both professionals, but also first-time landlords.
Brilliant. Thank you for that. Cara?
Yeah, so we look at first-time landlords as well. I think towards what we look at is the nature of the asset, what the client's profile like, what's the credit like, what's their affordability like. So it's not just about sort of a first-time landlord, sort of looking at the bigger picture as well. And we'll actually do a first-time landlord looking to buy a HMO. Sort of no maximum bedrooms. Again, we look at sort of the outside criteria on the flexibility of that. And in addition to sort of the second question about sort of the landlords and the larger portfolios, yes, we're equally as fine with sort of your larger portfolios and on that side. Again, it will also depend on the size of the portfolio, the type of asset, the affordability, the client's profile, but we underwrite each case on sort of an individual basis. So if you are ever unsure, just give us a call and ask us on that side, but we will look at both first-time landlords and your larger portfolios.
Excellent, thank you. Annette?
Yeah, very similar. So we will do first-time landlords, HMOs, multi-unit blocks, holiday lets as well. They don't need any prior experience at all, providing they're owner-occupiers, and we can look at that for them. And we are actually seeing quite a good number of first-time landlords, which is good to see. But equally, we can accommodate your professional landlords. We've just got a new semi-exclusive that we've launched through yourselves and a few packages, and that will take professional landlords up to 15 million exposure with us. And one of the good things is, because we're not PRA regulated, we're not having to sort of stress test the background portfolio. So provided it washes its face, so the mortgage payments is covered by rental, that's all we're really looking for, 100% coverage. So it just makes it very streamlined. We don't have additional requirements. We don't do any portfolio background checks on EDM or ETech like some lenders do. It is literally just the portfolio spreadsheet that needs to be provided. So yeah, whether you're a first-time landlord or a professional, then they can be accommodated.
Excellent. Thank you for that, everyone. I think where specialist buy-to-let comes into its own as well is that journey. That's something that Grant touched on, is that kind of first-time landlords progressing through that experience chain, if you like. And specialist buy-to-let in particular offers a lot of products, a lot of outlets for clients to try different things. If it is a HMO or it is their first venture into a bigger property or a more expensive property than they've gone into before, then a good broker building that relationship with the client, understanding the business model, can really hold the hand of that borrower and walk them through that life cycle.
Yeah, if you think back a few years, you'd have never got HMOs, multi-unit blocks for holiday lets for first-time landlords, would you? Everyone was looking for experience, etc. So it just shows how the market is progressing and improving and allowing access to these products. So
yeah, excellent. And then another niche client area is expats or foreign nationals. So Grant, on this one, have you seen changes over recent years regarding demand for expats or from foreign nationals?
Yeah, so it was beginning of this month, we went into individual expats, and it's taken off like we wouldn't believe. We've been wanting to do it for a long time. We finally got there, which is great news. And I think for expats, it's that want of engage. So I kind of link it in with several things. So firstly, green. So when they're buying properties, they don't want something that's big, that's going to take a lot of upkeep. They want something very simple, very easy. But to be tied into, to have that connection with the UK seems very important for them. And to be doing a buy-to-let is a great way of doing that. And they know the political stability, they understand the legal system, they understand mortgages and lenders. So it works really, really well. So we're certainly seeing the need for expats to have options. And I think the specialist lenders really now start ticking more of those boxes for them, which is great. So yeah, it's a really important market for us.
And Annette?
Yeah, I think I started off by saying it's one of the biggest areas that we're seeing growth in is the expats. Again, I just think that people that have left the UK, very often it's just their previous home that they've got. So it will be a consumer buy-to-let where they're looking to remortgage that property. And we're quite comfortable with that. We generally look at within the EA as standard criteria. If they're outside the EA, they're by referral. But I would say we probably even do more outside the EA than in. So it just goes to show, but we've done lots of different countries. So if it is on the FRA blacklist, if you like, we wouldn't be able to do that. And that list is updated fairly regularly, because I had an inquiry this week where the client was in Jordan, and Jordan actually is on one of the grey listed areas that we wouldn't be able to help with. And yet I know we've done a case previously in Jordan, so I was really glad I checked, because I nearly just said, oh yeah, that's fine. But yeah, so it is worth just checking that side of things out. Foreign nationals, as you guys probably know, we've just got a few key partners that we're accepting foreign national referrals on. But again, it's another growth area. We've seen a lot of clients that they've never even been to the UK, never lived in the UK. They've perhaps bought one already on bridging finance. We actually have one that we've done recently where he bought 5 on bridging and was looking for long-term exits on those that we were able to help with. So yes, it's a very new market for us, but we've seen that since we've launched, there is definitely a demand for that type of business.
Excellent, thank you. Cara?
Yeah, so we're still seeing this market remaining as popular as ever. We did see a little bit of a dip when in the pandemic slowed down, but I think that's probably more to do with people weren't able to get on aeroplanes and come and see the properties. But then obviously with the technology of now online auction houses and online viewings, that's now increased. We have no sort of different criteria for expats and foreign nationals. We just do a little bit more due diligence in the background. We can go up to 75% for your purchase or your remortgages. And so we're based in the northwest, but we do land across all England, Scotland and Wales, so all postcode areas. And we're still seeing a high volume of investors, foreign nationals and expats, looking across the whole UK in search of those rental yields as well.
Okay, excellent. So there's some really interesting topics coming out during the conversation today, and some good pointers for brokers as well. So we're running a little bit short on time, so I'm just going to jump straight to the last point, if that's okay. The number of issues in the background at the moment: Russia, Brexit, cost of living increases, etc., that we've all touched on during the course of the conversation. So, Cara, if I can start with you with this one, if you could look into your crystal ball, pardon the pun, for a second, what do you think will happen in the buy-to-let market over the next 12 months?
Yeah, I think there'll be an influx of remortgages from probably around who have been fixed in from around 2017 to 2018. Their fixed rates will mature, so and they'll want to sort of lock in a lower fixed rate as quick as possible. I think the fear of the soaring inflation. I mean, I drove past the petrol station the other day and it was 170, and I was like, oh my god, how has it been that high? I think that will also give borrowers to be keen to also lock in on their longer term rates as well for longer periods. And I also think landlords will continue to hunt for those higher yields due to increased cost of living, Brexit, Russia. So they'll look at more sort of diversified portfolios. So from your holiday let market, this remains buoyant. You've got several parts of the UK that are still underserved. And then you've got permitted development conversions as well in towns and cities, converted to multi-unit freehold blocks and HMOs. And it's looking at landlords to understand how properties can be used, how properties can be turned into HMOs, multi-unit freehold blocks on that side. So I think it's still at the moment, particularly with sort of criteria, flexibility, speed, a great opportunity to invest in buy-to-let still at the moment.
Brilliant, thank you. Annette?
Yeah, I totally agree. And I think, you know, if you read any of the press, everybody is seeing that it's still very buoyant. I think when you look back and reflect, like I mentioned earlier, when you see how many lenders now are in the holiday let, the HMO multi-unit blocks, those deals weren't available previously, I think the specialist market tends to sort of push those boundaries and expand the options available to customers. And I think from the conversations I've had with a lot of my accounts, there's a lot more semi-commercial type inquiries coming. So I can see that would be a very good growth area, that the boundaries won't stop where they are today. There'll be stuff, you know, in 2 years' time that we hadn't even started doing. So I think that's one of the good things about this industry, that it's ever evolving. We're learning, trying to improve and develop all the time, and I don't think that will stop. People need mortgages, and as Cara said, there's always going to be rates coming to an end where they want to remortgage, jump onto a new one. It's interesting to see that from a rate perspective, it's a lot more competitive to have the longer term fixed rates. So I just wonder what percentage of people will be thinking, yeah, let's go on that longer term if you intend to stay where you are. I think personally 5 years seems to go in a flash, so I can see that perhaps that will appeal to people if they know they're going to want to keep that property for some time.
Excellent. And we've had a question from Carol, I think specifically for you on there. She's based up in Scotland and said it would be great to have more options for specialist lending in Scotland. Foundation have made it. Will West One be looking at it soon?
Well, as Andrew Ferguson, our MD, is Scottish, but I don't think that's on the radar at the moment. There's a few different developments that they're looking at, but unfortunately, I'd love to say yes, Scotland's going to be added, but I don't think it's on the cards, not at the moment, but I wouldn't rule it out for sure.
Thank you. There you go, Carol. So not just yet, but hopefully in the near future from there.
Yeah.
And Grant, over to you. What's in your crystal ball?
Yeah, so I mean, the buy-to-let market, I think it was IMLA predicting it will be down around about 6 billion this year, which sounds a lot, but actually we had such a spike last year that it's very stable. And I kind of agree that the year has started very well. As Annette said, it has been buoyant. It's been a really positive place. I think that the importance of locking in is also really, really important. Because even looking at my own personal mortgage that I did a 7-year fixed with a rate starting with a 1, and that's unheard of. And I can remember a broker going, "Oh, you don't want to lock in for 7 years." It was the best decision I think I've ever made. I'm over the moon that I did that now. So I think the longer term fixes are really important for people. So yeah, that's definitely a growing market that I think that you'll start seeing more of that. But yeah, overall, the remortgage market predicted to be up around about 11%. So my advice to brokers at this point is you need to be so proactive with your customers. You need to make them aware. If you look at what's happened with swap rates over the last year, it was literally 0%. So for lenders, when we work on a weighted average coupon, I'm not sure, obviously Annette will be, but I'm not sure about Together. But from a weighted average coupon point of view, we haven't seen rates go up 1.9, 1.2 or 2% in line with what's happened with swap rates. And that's something that we're now starting to see, that lenders are moving. And it starts generally with the high street. They're first to move, and then we have to react as well to that. And it's really important that brokers speak to their customers as soon as possible. Even if there is an element of an ERC, you need to work out what's the right thing to do right now and just make them aware of what's happening in the market.
Brilliant. Thank you. Thank you, everyone. Thank you, Annette. Thank you, Grant. Thank you, Cara. There's been some really interesting topics come up there, and some really interesting pointers as well for brokers, things that they can take away and hopefully contact their client bank, spot some opportunities in there. And as I touched on earlier, I think a specialist broker in this space can add real value to the client's business plan and to their transactions just by staying close to them, staying close to the market. Obviously, keep your eye on our webinars, our marketing emails. The specialist lenders are very good at sending out updates as well and letting you know what's changing in the market. There's a lot of research out there. There's a lot of information that can all be put together and educate you, which means you can pass on that knowledge to your broker. You know, buy to let now isn't just a transactional approach. It's not just get a deal done and move on. It's about that hand holding and really making sure you're adding value to your clients. That's how we all complete more business, and that's how you retain your clients for future cases as well. So that's all we've got time for today. So thank you for the questions that have come through to everyone that tuned in. And certainly thank you, personally to all the panelists as well. There's been some really good topics there, and it's been an absolute pleasure talking to you today.
Thank you very much. Thank you for the opportunity.
Thank you.
Thank you, everyone, and see you all on the next Crystal webinar. Thank you.
Thanks, Chris.